a discussion about the Alberta economy with a number of dimensions. As we know, there are some hints that recovery is underway. There are other hints that we're going to go fall back again. The whole idea of the recovery to most of us has been, or of the economy, has been, is it resilient? Alberta for years has weathered under the impression, with much evidence that it's so, that we're not a very resilient economy, that we're not going to bounce back fast, that we're subjected to the volatility of the oil and gas industry. And until the innovation ecosystem is mature and can help companies survive and grow and stay, we're going to continue to be subject to the volatility of one industry and the relevance of the government to supplement the economy as necessary. So today, I've asked Peter Kinkaide if he will moderate a session, and Laurie Schultz from Galvanize, and Amit Monga from Toronto and many enterprises will entertain you today. We've got till 5:30. Watch your chat function. Using chat gives me a chance to throw questions at Peter and at others. So if you're familiar with Zoom, you know there's a chat function there. Use it to communicate with one another. Or to give me questions that you'd like the group to field. Without any further ado, you're on, Peter.
Thanks, Perry, or Dad, as I usually call you. I'll start with just a bit of background about myself. I am the CEO of Raintree Capital, Inc. and all of its subsidiaries. We're headquartered here in Edmonton, and we have a corporate office in Toronto. Few highlights from our various businesses. Raintree Financial Solutions is an exempt market dealer. It's placed directly just over $1 billion into private companies and funds here in Canada, and participated in the capital formation well into the billions for private companies here in Canada. As well, Raintree Corporate Finance is an advisory services firm, often referred to as an investment bank. We provide corporate finance services and advisory services to managers and entrepreneurs who are looking to either form capital around their ideas, who are looking or who are looking to transact in some type of M&A, mergers and acquisitions activity. With that, I will moderate. If you have questions, please use the chat function. And I'm going to hand it over to Amit to go through his presentation.
Thanks, Peter. Listen, it's a pleasure to kind of connect with everyone. Okay, perfect. So a little bit about myself. I think the way I'm going to position this is really, I call it my personal journey through the Canadian innovation and entrepreneurial ecosystems, and a view from the trenches. And as I go through that, I'm actually going to also talk a little bit about my background and how I kind of touch different aspects of this kind of as I was going through my kind of journey in terms of my PhD at the UFA, and then a couple of attempts to actually start the companies in Canada and go from there. So what I plan to cover, a bit about myself, my first business idea, which actually was in Edmonton, and then my kind of second kick at the can again for the entrepreneurial journey after I came to Toronto. And then I spent a few years as a venture capitalist as well before I jumped into investment banking in 2005. And what I wanted to really share was the view of venture capital when I was in venture capital, which was in around 2002 to 2005, and how things have really changed today. And what's the opportunity? And I just want to kind of emphasize, I think we're very fortunate to have Laurie as someone who's going to talk about how to scale up a company, because she's one of the most sought after speakers right now after not only after the Galvanize transaction that happened, but even prior to that. So I think we're very fortunate. And again, Perry, thanks for the opportunity to kind of to present, and look forward to kind of sharing some of my thoughts with you. So I'll start with about myself. So I came to Canada in 1992 to pursue a PhD in mechanical engineering at the UFA. And And the story goes, I came here to do my PhD in robotics. And in your PhD program, you actually get admitted to what they call as a kind of conditional status if you're a foreign student. And what that really is they basically look at your grades and say, listen, we have admitted you on the grade based on these grades, but we want to calibrate you to kind of make sure that your grades represent what a Canadian grad student would kind of do. And so what happens is after the first 2 terms, you basically write what they call a qualification exam, and it's an open book exam. You write it, and then there's a committee, you meet with them, and then your status changes from conditional to now you're a PhD candidate. So anyways, I got my questions, I kind of did them, I went and presented to the committee, and everyone kind of looked at my answers and said, we would like you to step out for a few minutes. And I said, like, what's going on? Like, here I am kind of, it's summertime, I'm all set to kind of start my PhD. And they called me back in and they said, listen, it looks like there are a whole bunch of solutions that you were just supposed to go to the lab and just pick up the answers. But you ended up actually doing these mathematical proofs. And we want to talk to you about something. We are in the early stages of putting together a machine learning program at the U of A. So I'm talking 1993. And we were wondering if you would like to be our kind of, candidate as part of this pool. So you'll still get a PhD in mechanical engineering, but we're going to want to leverage your, background in math. And just to kind of give you some background, I did my undergrad and my master's in Russia. So I was born and raised in India, went to Moscow in '86, and then 6 years in Moscow, and then I came to the U of A. So fast forward, I did my PhD in machine learning, in genetic algorithms, foundational research. And then I started my career at KPMG Consulting, thanks to Perry. And then after that, I ended up starting a company in California called Higher Markets. I'm going to walk you through that journey as well. I spent some time, 3 years as a venture capitalist as a company called MDS Capital, which is now Lumira Capital. And then most recently, I was an investment banker at CIBC World Markets, but I started my investment banking kind of career at National in 2005. So my first business idea actually was based on my PhD thesis. This was fall of 1995. I'm in Edmonton. Great idea, but no support. So location, Edmonton, Alberta, fall of 1995. The idea was predictive maintenance algorithms for mechanical systems. This was actually part of my thesis. This was heuristics. We had tons of data from different sensors. All these machines used to kind of stop during, all these sophisticated oil operations. The downtime, impact was significant. There was no place on campus to brainstorm commercialization. Got a great idea, where do I go? You go to Students' Union building, I was a grad students, you go to your faculty, engineering faculty. I went to the business faculty. Everyone's doing their own thing. The industry liaison office, I found out, was somehow kind of helping you with tech transfer, commercialization. And what I really learned was they were primarily focused on licensing and patents. There was no expertise in technology commercialization at the faculty or the university level. The focus primarily was, how do you partner with the industry, get as much money as possible for research, or do research, or basically place your research, your kind of research associates or students for jobs. And that was the extent of it. We had, I believe, a very good co-op program at the engineering faculty as well, but there was no word around commercialization. There was no angel investing or incubation support ecosystem either. So again, 1995, Alberta, great ideas. We are like the top university when it comes to research, at par with U of T and UBC. Perry, I believe Martha Piper was VP Research at that time, right? So those are the days.
She had been Dean of Rehab Medicine here at University of Alberta, and then she'd gone to head, I think she became president of
UBC.
UBC. Yeah.
That's correct, yes. And really, it was at that time I kind of started thinking about like, what's going on? And so, listen, you have a great idea, you're a grad student, and met Perry, and I joined KPMG Consulting, which was great because what KPMG offered me was basically a global platform, based in Edmonton, right? So we had at that point the opportunity to partner with different offices around the world, and also had the fortune of actually spending some time with Laurie there as well. So that really was kind of the state of innovation at that time. So second kick at the can. So now I joined KPMG Consulting, as you saw here. I actually eventually ended up moving to Toronto, so now I'm in Toronto. This is 1998, 1999. We are in Y2K mode. We're like, the consulting companies are, saying like, if the project is less than $20 million, please don't talk to us. The Canadian dollar is, I think, like 1.4 to the US dollar kind of a thing. So, obviously the labor arbitrage, everyone from Toronto offices on the plane, Sunday night, working in US sites and coming back. So one of my first projects, actually, when I moved to Toronto, was actually Oracle implementation at Yale University. So that's what I was kind of working on. And as I was there, I realized that there might be an opportunity for us to actually do e-procurement software for higher education. It was very simple. This is 1999. This is when your Amazon interfaces would look like, Mosaic kind of browser interfaces, a lot of paper-based stuff, a lot of professors basically filling out invoices. The idea was, is there a way to kind of capture that workflow and feed it into an SAP or Oracle or whatever enterprise software company that you use? So fall of 99, I started this in Toronto. The challenges at that time, things were not different in Toronto either. So lack of seed stage investors in Toronto. Technology valuations were significantly lower than the US. So when I say significant, I'm talking 10 times. Like pre-seed ideas were valued at $100,000, versus if you went to Sand Hill Road, or even if you went to Presidio, or even like downtown San Francisco, you basically were able to get credit for your experience, which you were not getting in Toronto at that time. So the outcome, I moved to San Francisco, added 2 more members to my founding team. So my cap table went from I own 100% to 2 more founders. We all owned 1/3 each. One of the co-founders was running a higher ed focused private equity fund in New York. He quit his job to join my company. And another co-founder was one of the top lawyers at Wilson Sonsini, Goodrich and Rosati, which is a top kind of law firm in Silicon Valley. And 3 of us basically ended up starting Higher Markets. We raised $1.5 million, and subsequently we raised another 15. And the company was acquired by SideQuest in 2002, which was subsequently taken private by Excel KKR. And now the company is called Jagger. So I moved back to Toronto after the company was sold. But just this is another data point where you had some great ideas which were actually being taken to California, and they were actually getting funded. The other thing I wanted to highlight was my first 15 employees were all Canadian. They actually all quit their jobs and moved. Perry, I don't know if you remember Blair Freeman, like blast from the past. He was one of the supply chain kind of key guys. He left his job and KPMG and enjoyed as well. So that's kind of like, now we're in 1999, and frankly, things were still, hadn't really changed in Canada. So now I'm back in Canada as a VC. It's 2002. So VC investing in early 2000s, and I'm gonna just talk about some of the funds that were super active at that time. So Vancouver had Ventures West, which was a very, very well-run venture capital fund. It was headquartered out of Vancouver, but they also had branches in Toronto as well. I don't think they were in Montreal. GrowthWorks was a labor-sponsored venture fund, which basically started in multiple provinces and again, based out of Vancouver. And what they did was they incubated actually and invested in some really, really interesting technology and life sciences companies. And I'm sure there definitely are probably members who were, part of these portfolio companies, which may or still be working for Laurie, for example. Toronto had several kind of big venture funds by that time. Vengrowth, $1 billion under management, technology, healthcare, materials. A lot of interesting companies incubated by them. Canadian Medical Discoveries Fund was focused primarily on healthcare. And then MDS Capital, that was a very interesting kind of fund because I don't know if you remember, there was a big healthcare company in Canada called MDS Inc. A while ago. It was a conglomerate of multiple healthcare and life sciences companies. They started first as a corporate venture fund, which was about $100 million. But subsequently, they ended up actually raising a lot of kind of money from pension funds. And they also actually ended up managing labor-sponsored funds. And one of them was actually Canadian Medical Discoveries Fund. So I was a VC at MDS Capital. I was focused on early stage investing. And at that time, I was managing 3 funds of $30 to $20 million each. So under me, like directly, there were about $80 million of early stage investment funds. And what we did was we actually created funds around innovation ecosystems. So one of the funds was called Golden Horseshoe Venture Fund. We basically had, we were working with the tech transfer offices at University of Guelph and McMaster University. And also from University of Waterloo. We had a London Healthcare Sciences Fund, which was primarily focused on technologies coming out of the Robarts lab at University of Western Ontario. And then we also had funds in Toronto and a fund in Montreal. So that was really kind of my time where I actually spent a lot of time with professors in ILO, the liaison offices, the tech transfer offices, and focus really primarily on, commercializing them. And what they really were at the end of the day, feeder funds for our larger funds or larger companies. And that ecosystem today is very, very well developed in Canada. Celtic House, I wrote it down because this was based out of Ottawa. This was started by Sir Terry Matthews, who still continues to be super active in the innovation space today. Propulsion Ventures was a fund that was started by Charles Serrois and had LPs from all the big Quebec pension funds as well as national at that time. So VC fund investing really in early 2000s was really kind of taking off. So where we are today, I mean, this is a snapshot from this report, by the way, is available on the Canadian Venture Capital Association website. This is a snapshot of 2020. And what you're seeing here is like a whole bunch of active, funds. BDC obviously continues to be very, very active. Real Ventures, I actually talked to Janet Bannister this morning. Is an early stage fund. They have invested in multiple kind of deals. Desjardins, Mars Investment Accelerator Fund, run by Michelle McMahon. Round 13 is Bruce Croxon's fund. And then Inovia Capital, which has been very, very successful, but has been around for a long time, was one of their big home runs was Lightspeed. They have just recently closed another kind of growth fund as well. So now they kind of play at all levels when it comes to investments. They're headquartered out of Montreal, but I believe they have offices, of course, in Toronto, but also in Vancouver as well. So just to kind of give you an idea of like things now have really, really taken off in Canada. We have access to some very good quality venture money. And then obviously once the things kind of take off, there is a lot of interest from USPE shops, which I'm sure Laurie will talk about as well as she talks about her story. So things are looking really good for Canada. And again, this is Omer's Ventures kind of recently put out this slide. It talks about that 9 of the top 25 Canadian tech exits ever have occurred. They actually occurred in January of 2020. So here's, you've got Galvanize here as well. But as you can see, like a whole bunch of companies are now doing extremely, extremely well, and which are all the good exits for the VC funds. And all of these companies have a huge impact on the local technology ecosystem as well. So what is the opportunity? I mean, obviously there is no one universal solution. I think the whole idea is identify your niche and start a business case that solves real problem and delivers return on your investment. Without being too motherhoodish here, I'll give you an example. I mean, one of the companies that just got funded yesterday is called Swift. And what Swift does, it basically is last mile delivery company. And we all know how important that piece is, right? So, I mean, we're going through COVID right now. You want to support your local restaurants. And there is no other option for people to actually access last mile delivery. It's actually the only way you can do that currently is through Uber Eats. They take 30 to 40% from your top line, so which basically makes a lot of the restaurants cost prohibitive when it comes to kind of doing that business. So that's a perfect idea, which was incubated during the COVID time and got 17, I believe I'm seeing numbers between 17 and 22 million to take it to the next level. And listen, I think not every idea can scale, so you should be smart enough to find a home for your idea. Back in the day, the only place you could do that was with very large companies. And what we are finding now in Canada is if you have a really good kind of talented management team, and Laurie is a perfect example of that, you know, under her leadership, it's very good to kind of, you know, build these companies. And if you can't scale, find a home in some of these companies. So at the end, like, I mean, listen, it's all about execution with the right management and leadership. And maybe I think, you know, we'll get Laurie to kind of dive more deeper into her story and share some thoughts with us as well. So thank you very much.
Thanks, Amit, and great presentation. Really, really appreciate that. We've had one question come in. Maybe we'll just take a couple of minutes to ask a few questions.
Yeah.
My question, you referenced a few of the labor-sponsored funds, which was sort of de jour, I think, in the 90s and into the 2000s. Maybe less popular today, though there are still some.
Yeah.
What impact do you think that had on the innovation ecosystem? Because they, at a certain point, they took a bit of heat in terms of their performance, but maybe performance wasn't the only objective.
Yeah, and that's a great question, you know, Peter. I think the performance wasn't the greatest because I think the problem there was, you know, the companies couldn't scale very quickly, so you know you couldn't see the return. You know, very like, you know, just imagine you have a venture fund, and now if you make it publicly traded all of a sudden, you have to go through that L-shaped kind of curve first, because you're deploying, and then you might get a 10-bagger at some point, or a 4-bagger or a 5-bagger, but it's not going to happen instantly. And I think what was happening was, I think there was a combination of, there was a pacing requirement as well. So if you raise the money, it was apparently like X, percentage of capital raised had to be deployed. So the problem was you didn't have enough management teams. And so the way I was working at that time, because I was dealing with some of that issue, it was like, oh my God, we just raised $40 million. Now we got to deploy 25. I'm just making up numbers. And like, there's no way I can deploy $25 million. And I had to deploy that in Ontario. So it's like, well, we just, funded all the good companies last week or last month or last quarter. So what we ended up doing, actually, believe it or not, is we actually sat down with the management teams and said, are there specific areas that you're focusing on? So for example, one of the things I created was, I called a company called Pain Scepter. And what Pain Scepter was a holding company that was doing roll-ups of all the pain therapies. And so if the CEO said, yes, these are the 5 areas, we almost kind of brought them in as a member of our investment committee. And then we actually then said, okay, great, we're going to do this investment, and we have the ability to now deploy it. And that's what I was doing through my early stage funds. But to answer your question, maybe return wasn't the greatest, just because venture capital cycles are longer. And I think there are studies out there that it's very hard to kind of manage a publicly traded venture fund. People have kind of, done studies on that, because there is significant holding company discount. But what it did was, it actually turbocharged the commercialization kind of mindset, at least what I saw in Ontario. And I think something we saw definitely in Montreal as well. And I wasn't on the ground in Vancouver, but there are people like Julia Levy and the Angiotechs of the world and so on, who basically, I think, had a huge impact in Vancouver as well. At one point, Vancouver was the biotech center for Canada.
In the slide previous, you referenced a number of funds, some of them involved in seed stage of financing, but my guess is most of these are Series A and beyond. I'm sort of curious, going back to your time in Toronto and Edmonton, you said there was a real lack of even seed stage or angel stage capital. Have you seen that change at all over the last 20 years?
Yeah, that's a great question. I think definitely more seed stage funds now. So you're not seeing, like, at least I can, well, Laurie, maybe you can feel free to chime in. Like, for example, Boris Wertz's fund, right? Like, has done extremely well. That's an example of a very successful seed fund in Vancouver. In Toronto, Real Ventures has done a great job in terms of seeding it. But I think the key thing, Peter, that has really changed today is the seed funds are talking to angels. So, like, which I absolutely love. So I come to you, you're one of the venture partners in a seed fund, and you kind of go, Amit, like, listen, you are actually a bit early for me, but let me connect you to this person who would be a perfect angel investor for this. And what we are finding is, it's a classic problem. Like, you start, like, a good quality seed fund is 50 million, because then you can do, like, smaller investments. But the thing is, the moment you start doing a good job, like, people are like, you got to take more money. So Real Ventures now actually is, on an average, manages like $150 million. And, their check sizes would be around 2 million, million to 2 million. So what they've done a great job of is basically said, these are some of the angel investors you should connect to. So I think that connection is very, very critical. And the other thing I would highlight, which I didn't highlight on my previous slides, is there's an organization in Ontario called Ontario Centers of Excellence. I think it has been rebranded as Ontario Centers of Innovation, and so because of some amalgamation and so on. What they do is they do non-dilutive funding. And they actually have VCs as people who review those applications. So, which is awesome, because I get insights into what's coming down the pipeline in 24 to 36 months. And I get to actually test drive those technologies and teams with non-dilutive funding. And by the way, these are grants, but the way they do it is, I mean, at the end of the day, it is going to someone who lives in Ontario, and they're going to get 40% back in taxes anyways, right? But it helps people to kind of, accelerate some of those commercialization pieces. So I think what has really changed, and it's working extremely well now in at least where I am, is the connection between the early stage kind of research funding to kind of, commercialization grants to pre-seed and so on. And then obviously, back in the day, you had to go to the US to get the growth capital. So, there's good quality growth capital available as well.
And maybe I'll ask this question of both you and Laurie, but it strikes me, and I hadn't seen that data in terms of the number of billion-dollar companies that Canada had created. Do you anticipate, as a result of that we should start to see some of that capital recycle? I mean, there are going to be managers and early investors in those companies who presumably would have done well. And are we starting to see a little bit of that flywheel spool and see some of that money turn over and be reinvested, or frankly, even some of those talented people share their experience with new entrepreneurs, new managers who may need some governance support or just mentorship?
Maybe I'll throw my comments in on that. Circle of life is just the frame of reference I'm thinking about through your great slides here, Amit. I was never the entrepreneur that was looking for seed like Amit, and I was obviously never the investment banker or the source of capital for whatever reason. I always have been the operator. I've invited into businesses that are mature, and of course we've had this billion-dollar outcome. Worth noting, we've been around for 49 years. So not many tech companies have been around 49 years and get a unicorn kind of outcome. I find someone like me gets a little lost in the crowd of conversation. I think as an industry, we're kind of consciously incompetent around the need for seed to kind of incubate all of this startup. I actually think we're decently good in Canada at that. But when you meet someone like me who maybe has this outcome, I think there's a real opportunity for us to do a better job retaining us. And it's certainly responsibilities mine as well, but to reintroduce us to that next generation of talent as angels or as mentors or otherwise. And so I do actually think there's an emerging opportunity for kind of this circle of life. I think there's a huge opportunity for companies like this, and certainly mine, to incubate the next generation of tech, both because, in our case, hundreds of employees had this experience, many of them now the financial means to do so. And that's, there's a lot of good to be said about that.
Yeah, and I'll add to that, Laurie and Peter. We've seen definitely Ottawa has benefited from Shopify. Swift, multiple angel investors who are existing Shopify employees. There was a new venture fund that was started by women employees of Shopify as a separate venture fund. So definitely seeing that kind of, being kind of recycled. And I think the next stage really is for those funds to actually leverage, the very scarce experience kind of skill set that Laurie brings to the table, or people like her, who come in, take like an existing kind of company or companies that are kind of, on the ramp to kind of, take it to the next level. And I think that's the only way you can create more billion-dollar companies and billion-dollar exits. And the more wealth you create, and people are going to give it back to the ecosystem.
Great comments. I have to ask this question because I need someone to interject. Perry and I frequently debate whether, sort of leading up until this point, and again, this slide is indicative that we've made significant progress, but Perry would lament that the gap or the biggest challenge to fostering the innovation sector here in Alberta, let's say, and maybe across Canada, is a lack of capital. And I would argue, you show me good management teams with good ideas, and I'll find you the money. That's not a problem. I'm curious between the two of you whether you can settle our argument about whether the gap has been or continues to be capital or management.
And you better get it right.
I'm going to give it, I mean, I don't really have maybe the most representative experience. We'd already hit a point of scale. And as a result, I frankly didn't find it really that hard to secure investment interest. But to have the right kind of leadership, man, I mean, I had to clear the deck when I got here. And if you don't mind me just talking like I normally talk, it was Keystone Cops running the place, taking advantage of a founder who didn't know what he didn't know. And, I would say certainly don't throw money at a business that doesn't have the right kind of management team. And in my observation, at least in the BC tech scene, I find so many founders who are obviously very capable, get their business to a certain point, call it 10, call it 20 even, and then they don't know how to get it through that next brick wall. What Harold Will did, he kind of the commercial founder of Galvanize, is he actually passed the baton to someone like me that had, several years of experience driving a business to scale. And not many founders do that. And that's where I personally advocate for a shift in the conversation. Not that we don't want to continue to incubate talent out of universities and seed fund them, but there's a missing conversation, which is taking, call it the mid-sized tech and, dating operators with founders and encouraging them to pass the baton, because they can move into board roles and still leave a legacy and still meaningfully participate, but put folks like me in charge of scaling the business, because and I, not to sound self-congratulatory about it, but that will encourage someone like me to stay in Canada.
No, Laurie, great point. I mean, I think if I was to just build up on that, I think I see Arun on here as well. But, a few years ago, I came to kind of, look at a whole bunch of kind of mid-market size businesses from an investment perspective. And I think my biggest challenge was most of these businesses actually didn't have the next layer of management. Mm-hmm. So it was like, okay, great. You have a very strong entrepreneur, and then you have a controller, and you have an operations manager. It's like, okay, wait a minute, where will I kind of fill these people from kind of in terms of that management layer? So that's really an example of, an existing kind of, business, tech and so on. But on the venture capital side, I would say, Peter, look, Jobber is a perfect example. If you can scale a company, there were lineups of private equity VCs, to invest in Jobber, and that's an Edmonton story. To the point, they had so many calls. They actually had to interview investment bankers to kind of help them to go through that. And so it's, I think things are changing now. I think the mindset is changing. I think the entrepreneurs need to be open in terms of collaborating, in my opinion, with the talent teams across different provinces. I think there still is okay, it's made in Alberta solution. We want to do it. We want to scale it here without any help. I mean, I think it's important for people to kind of say, we don't need to be a separate company. I can be the AI center of excellence for Galvanize in Edmonton, or why can't we do that, right? I mean, not every company is going to scale up, but the reality is, the moment you do that, you start learning so many things about the other company. That's how you're going to start incubating some interesting ideas. But I think good companies, capital will find them, and we've seen that in Calgary with Benevity. That's another example. Yeah. So I think there are really good examples that are popping up now in Alberta as well.
Very good. You know what? I just won, so thank you for that. Laurie, why don't we shift gears and if you could do a screen share, and
Sure.
why don't we hand the presentation over to you?
Peter, just
My pleasure.
before you go, I have a question for the three of you.
Go ahead.
Peter, yourself and your debate with your dad. I consider myself more of an entrepreneur than a finance person, but I have been at it. I'm pretty well informed about the characterization of entrepreneurs and the challenges they have handing over businesses. But with that understanding, what we try to do as we look for investment is pretty common. What you said is pretty common. Management team has been challenged. Thus, we tell potential investors what we are looking for is what we call smart money. We have no problem, whatever capacity you feel is missing, and come with that. We are not interested with your money alone. Bring in that management capacity, some of which we recognize in ourselves, and get us going. Now, the question I have is the investment community of whatever level or form, if they suggest, oh, there is a management capability lacking, what is there to stop them from coming in with the management team, take over the business, and take it to the next step? That's why I agree with Perry's argument that Edmonton is lacking that capital or willingness than management team. Could you comment on that?
Absolutely. And Amit, you might be a little bit better to comment on this than I. I mean, as an intermediary, we're there to find opportunities and bring them to investors. And somewhat self-deprecatingly, or maybe somewhere practically, we're lazy. We're not going to fix anything. We'll identify the problem, but as intermediaries, we're not going to fix it. And so, and I say that tongue in cheek. I mean, we do help managers position themselves. We will identify issues. If we can bring resources into an opportunity, we will, but not to the extent of true rolling up the sleeves, because there's only so much time to invest in these activities. And if our return on investment of our time, experience, and expertise and Rolodex is better placed on something that is easier, we'll gravitate there.
And I think this is the distinction, Peter, between an institutional investment and an angel. I think, Tam, that what you're really looking for is an angel who has the time and the interest to roll up their sleeves, take their life experience and probably their life savings, and jump into a company and row for a while and do what they've probably been doing much of their life, and find the industry or the business that you're in aligned with what they've been doing for a lifetime. So it's finding that angel that is prepared not just to dole out money. That's simple. No. But as you say, a smart angel, an angel who brings to you intelligence, experience, and wants to make sure that they've protected their own investment.
Exactly. If I may say, when I joined Galvanize almost 10 years ago, I don't know, I feel like I'm kind of an intermediary myself. I met the founder, of course, I met the leadership team, and I formed an opinion on, what kind of leadership team we needed to match to the opportunity. Fast forward a few years, when we brought on our first first investment after 25 years of a bootstrap existence, we were as scrutinizing of the investors. We saw it. We profiled them the same way. We hired very selectively, or we took money very selectively on the formula of you have to believe in our values. Our culture is not for sale. We would, you had to believe in our vision. And of course we had to have alignment and valuation. So I just throw that out there as, I was as careful of who we brought, who we took money from, as I was from who we put on the bench to lead the business.
Oh, that's the marriage. I mean,
Yeah.
that is the marriage.
That is
Yeah.
the thing. Anyways, I was just thinking, because you are all successful in these investments, building companies and all that, what I'm thinking is you may have a roster of your star turnaround or builders or managers on your roster.
Mhm.
And if there is a bit of collaboration in that sense,
Mhm.
you would be, the investment community would be in a much better position to make referrals. If you talk to ABC, we may talk to you next time or something like that. As an entrepreneur, you do lots of things in a day. You don't have access to those stars or considered stars by the investment community.
Mhm.
That poses a challenge. I like to talk to you more offline, Laurie. That is really great. That's the dilemma we are going through
Yeah.
right now.
Yeah. Sure, my pleasure.
Laurie,
Well,
do you want to do your presentation?
Sure, I will. I'll share some of our story here. I'm not sure if any of you know us as ACL. We rebranded in 2019, but it's my pleasure to be here. Thank you so much, Perry. I've seen you now more in the last few weeks than I have in the last couple decades. And what a great kind of deja vu. I almost feel like I'm working at KPMG, hanging out with you and Amit, my good friend. And I learned so much then. I've had 5 jobs, or 5 company careers, if you will. TELUS, KPMG, Intuit was my first bridge into software. 1999, Perry, it's when I left you. I was the product manager of Quicken. That's how old I am. I'm not sure if any of you guys have used that, but when I joined, I had to restart that. It was pretty much an obsoleting software product facing into Y2K, so it wasn't a bad year, at least the first year I joined. I was with Sage, and here I am at Galvanize, near my 10-year anniversary, which I think in dog years for software, it's the same ratio. I've been here for over 60 years by that point of reference. We were born in the University of British Columbia school system, 1972, if you can believe it, just when computers were emerging. Professor Hartwill, MIS, an accounting professor with a bunch of students, wrote this algorithm that allowed kind of normal people to write a script to interrogate data for anomalies that could be indicators of fraud, corruption, and waste. And thus audit command language was born. He gave that away to all of his university buddies around the world for the better part of a decade, and to auditors alike. And his son finally couldn't stand it anymore. So his son, Harold Will, took over and commercialized the business in 1987. And Harold actually built it to a 6,000 customer footprint in 130 countries around the world. So pretty impressive. That was entirely bootstrapped. I wasn't there, of course, at the time. Could never really get any kind of financial support from the Canadian banking system. When I joined, we enjoyed a long-standing relationship with Silicon Valley Bank, who were, maybe a bit more learned about the kind of business model that comes along with software. And Harold built the company bootstrapped to about a $25 million US footprint. And by the time I'd shown up in 2011, amidst all the acclaim of building this category focused on auditors around the world, we'd actually kind of flatlined. And most people in town here in BC thought we were kind of the losers of tech. I hate to be so ungentle about saying it. They felt we'd missed our mark. We should have sold a lot earlier. And you knew it when you walked inside the building, because employees were not, they were kind of 9 to 5. Our technology was obsoleting. We were way underspending. And we had this mission to be $1 billion, the world's most trusted $1 billion software company. And everybody thought it was a joke. And so as I considered this grand opportunity to follow through on $1 billion outcome, with the emphasis on culture as a starting point, a lot of folks around town were saying, like, why are you doing this? There were bets on, whether I could last even 3 months. And I lasted 9.5 years so far. So not so bad. This is Professor Hartwell and Harold, and this is us standing up against a milestone wall many, many years. It's actually, if you can look at the visual there, it's the Vancouver skyline. And Harold invited me in 2011 to come in, and he's 3 months younger than me. He invited me in to come in and break all the rules that he created in the first place. So I like to think of myself as kind of a re-startup entrepreneur as opposed to the startup. And that took a lot of guts. I mean, this was his life's work. This is his family heritage. And to bring in little Miss Keener to come in and break things up, I mean, that takes a ton of humility, right? And I just want to amplify the point because I think that's one way for us to incubate more tech in Canada faster, is to, kind of role model this outcome that Harold and I had, where he had enough humility to pass the reins. And, I worked really hard to build chemistry through just crazy communication. He joined our board, and together we broke a hell of a lot of rules that he created. And it wasn't easy, but it sure as hell was a lot of fun. So if I may just be a little bit kind of, melodramatic here, we were on this treadmill. We were about 2% growth and largely uninspiring. And we had to create a future that otherwise was not going to happen. And so when you walk into something so established, where it's privately held, you make a big miss, it's a big, big, big loss, primarily for one individual. And to try and create a culture of risk in something so established was probably the experience of my life. We had to embrace what we didn't know. We had to make promises that we didn't know how to keep, and then we had to live up to our word. And this has been the theme of our transformation over the last 10 years, starting with Harold, willing to allow me to do that, and giving me points for creating belief in something that people couldn't see at the time. One thing that we did to state the obvious is we asked employees and customers what they thought were the opportunities we were missing, and we gave them authorship of the destination. And in doing so, we created accountability and belief again. We use a lot of symbols. Project Heisenberg is one of many, many famous symbols at Galvanize. It was a project we had to convert our business model, but just using it as a backdrop, here's kind of my 10 years and change at Galvanize. And this is just kind of showing kind of a revenue relative to profit journey. Now, if you look at 2011 through kind of 2015, you kind of think I did a pretty shitty job. It wasn't exactly growing, as you can see. But what we were doing is giving the business a 7-organ transplant, and starting with a shift in culture. I did move out management. We needed folks that were far more collaborative, that weren't taking advantage of the founder. We reunited people around kind of the value of authenticity and embracing ambiguity, another value set for us. And quickly thereafter, 3 months into my role, we acquired a true multi-tenant cloud technology. And I remember early having to save it from all of the antibodies that wanted to kill it. We were a classic on-premise perpetual technology business, overly dependent on consulting. And I had to create space for this new technology. I had to overpay for people to sell it. Selling cloud to the auditors back there in the olden days of 2012 was not easy. And ultimately, we did a reverse takeover. That technology became what is our market-leading technology today, a high bond platform. And with kind of culture, meaning people, and technology driving a reinvigorated customer experience, Project Heisenberg in 2014 was what we did, what we called the business model transformation. So in 1 year, 6,000 customers in 130 countries around the world, we bootstrapped the transition from perpetual to subscription, which if you've done something like that, tanks the P&L. That's not an ungentle thing to do. We literally flipped it upside down for 2.5 years. Honestly, it was way easier than I thought it was going to be from a market acceptance perspective, but man, it was hard as hell from a G&A perspective. We didn't even know how to count our money because there was no money in account. So we lived in our balance sheet for a while. And on the other side of that, first time in, now 30 plus years, we brought on investment, a $50 million minority investment. And that was a great celebration. We were able to give a little bit back to employee shareholders. All employees had stock options, as well as drive a boatload of additional investment back into our go-to-market and R&D. And as I'd mentioned earlier, we were really, really, really careful about who we brought in. We didn't want to have assholes in our boardroom. We didn't want to have a playbook kind of jammed down our throats. We wanted somebody that we could learn from, of course. We didn't want easy, but we wanted somebody that authentically bought into our values and our vision and would pay for what we felt that we were worth. And we got that in a partner called Norwest Venture Partners, US based. I should be ashamed to say, as a very, very patriotic Canadian, that we did not court or get courted by a single Canadian investor in that exercise. We pitched 13 organizations, all US based at that time. And with Norwest help, we rebranded the business. We've been acquisitive over time, buying not just technology, but buying geography. We bought our Asia business. We bought talent. We bought a usability team in the US. And most recently in 2019, we bought a go-to-market kind of business in the cyber security space. And those things combined to see us double our revenue footprint from when Norwest came on in 3 years. And, even through COVID, ensured we were very resilient. We're 89% recurring revenues by that. And so back to my opening comments, while we didn't grow that much in those few years at the beginning, what we were doing was converting to cloud and converting to subscription. And of course, the market multiples on that kind of business are significantly higher than kind of the legacy old technology business model types. And so 2020, trying to figure out how to be a leader in COVID, which was obviously crazy for all of us. We led with a lot of empathy. We've always emphasized employees, and completely unexpectedly just started getting an enormous amount of inbound. And I should say, it was actually never my goal to sell to the US. In my jobs before at Intuit at Sage, I was the Canadian running US kind of headquartered products. There's a bit of a melting pot culture that I didn't love. And, one of the reasons I came back to run Galvanize was because it was headquartered here in BC. Really, really proud of that. And was my goal for us to hit $1 billion valuation and go public with the goal of building it to keep it. And yet here I am, as you know, and in fact, it was just 2 days ago, literally, that we did close this transaction with Diligent, US based business. I'll talk about that a little bit more, but we had a path to $1 billion. We expected to double our business again in the next 2 to 3 years, and it would have been our intent to go public. And then COVID happened and all of this inbound stuff happened. So I want to talk to you a little bit about that transaction, but before I do, it's just, from somewhere to nowhere. When I joined, these are Forrester Waves. This is an example of an analyst report in my space, governance, risk, and compliance. I mean, we weren't even on the map. And, it feels so great for myself and for employees to, have made that top little corner up there on the edge. Not so bad for a little Canadian business that had a lot of humility, that's been around for a long time, and that ultimately picked itself up off the ground and did that 7-organ transplant and, became a leader in our space despite all odds. So if I think about our route to $1 billion valuation, $1 billion US dollars, and some of the things that we did in 2020 in particular, we had a one-page strat plan. It aligned us up, down, and across the organization, my board included, on values, vision, mission, moat, and priorities. We used this to referee what type of investors we were interested in. those that fell asleep when we talked about our values, we didn't talk to anymore. We literally, and maybe anally, some would say, had $1 billion heat map, a very organized, visible multi-year path to $1 billion that had performance indicators across employee, customer, market, and financial. And we got really good at telling our story. And we told the story the way we wanted to tell it. We were ourselves. We were authentic. We were differentiated. We had a very compelling view of our total addressable market. And over all of the years of building relationships, primarily with USPE, we gained a track record of saying what we were going to do and then doing what we said. Like when we did the business model conversion, most of them were like, "You're crazy." And when we got to meet those guys 2-3 years later, we'd done it and they were shocked. So we gained credibility over time on the formula of just an obvious thing, building relationships. And I'll say maybe right now it seems the right moment. I looked at your list there, Amit. None of those, we didn't talk to a single one of those VCs. Yes. Obviously, we were too big for them. But we didn't have a relationship, not with a single one of them. So shame on me, but shame on them as well. I think that's an easy thing that we could all do collectively to maybe change things a bit. And maybe I'll just say here, we're very methodical around who we talk to. My job last year was really to create choice. With the favorite of going public, we engaged on about 9 investment bankers to keep us honest and help evaluate our prospects and things that we had to tighten up on. We had this influx of private equity, and we were courting many of them as well with the goal of taking on additional investment. We were looking at, if we were to have raised, we would have raised about 400 million the next run so that we could make significant acquisitions. Because I think you get to a point of size that we were at, we couldn't have just small little onesie-twosie acquisitions to kind of have the global impact. And in fact, our competitive landscape is consolidating to the extent like it was turning into mid-size on mid-size, not bigger guys picking up small guys. So our competitive landscape was fundamentally changing, and we would have needed equity to stay well ahead of our competition. And then lastly, on a very, very, very selective basis, only for the most compelling customer value proposition would we have considered a sale to a strategic, and ultimately we did. If you know anything about our space, we sell software to auditors and security information, security officers, risk professionals, who unfortunately don't always get the audience at the board table that they need. And Diligent, if you know them, they own that space. They own board governance. Our customers now have access to the iPads of 700,000 of the world's most influential leaders. It is a marriage made in heaven. And ultimately, my number one goal and obligation as a CEO is to make sure that that customer value proposition is outstanding. And ultimately, we sold to Diligent for $1 billion because of that opportunity to elevate the impact that our customers could have. And so just lastly, maybe a little bit of a peer slide. It does have a picture of a unicorn, but maybe not as pretty as yours, Amit. I'd like to maybe compare notes on this. We've been doing some homework. This may not be a perfect list, but as far as we can tell, there's around 20 in tech, Canadian tech, that have achieved unicorn status. Just some fun facts there around, the number worldwide, 50% coming from the US, 30% from China. Women emerging on the scene, call it, bumping 10-15%. This is the first one in Canada that's ever had a female at the helm, and hopefully there'll be many, many more in the years to come. So that is our story. And I will just maybe make these parting comments just back to, it was my ambition that we go public. And I do feel bad that headquarters won't be here in BC, but I can say this, our customers are way better off, number one. Number two, our ability to compete is much stronger. Only 3% of our customers are in Canada, which may shock you. I've got more customers in Brazil than I do in Canada. And it's just one thing that, I don't have the answer to this for the Canadian ecosystem. The one thing that we can't do is create a bigger market. And I think that, to be north of 100 million in Canadian, as a Canadian tech headquarter, you have to be really, really good at global. And there's not a lot we can do to address the size of our local footprint. I have more customers, more business with US federal government than I do, probably 5 times bigger than my entire revenue base in Canada. And so, and I'll say in the past 2 months, I've had the opportunity to talk to hundreds of current and former employees who did this and who get to wear the unicorn badge and who are incredibly sought after with, the shortfall of talent here in BC and in Canada, of course, as well. And they now have the experiential and the financial means to incubate the next generation of talent. And that's where my mindset is shifting fundamentally for myself and for many, many employees. Perry, you said, where do you find them? I got 20 on my bench. I'll introduce you. They're amazing people, normal people with integrity of intent, with diversity of experience, who now have this experience and they're ready to do it again.
I'll take you up on that.
All right.
Your phone will be ringing off the hook, I'm sure, Laurie. That presentation was excellent. Thank you for that.
Yeah.
And congratulations. I didn't realize how recent it had closed. So
Yeah, good timing.
yeah, that the fact, frankly, that you're sharing your time with us is marked. For those who haven't been through an M&A process like that, there is a tremendous amount of work that goes into a transaction right up until the close, and especially for the CEO and the C-suite. So, you should be on the dock behind you, not on with us.
I will be soon. Thanks.
Thank you. One of the points that you just made that I want to ask a question about is the global footprint, because you are spot on that for Canadian organizations to grow to the scale that your organization did, almost always they've got to go beyond our borders, and in many ways beyond many borders. Is there anything that you have learned over the last 10 years of your career in terms of going global? Is there something that you can share in terms of something that you learned about doing business globally, something that was a mindset or that you took or the organization took to sort of continue to grow its footprint globally? Yeah,
sure. Maybe a few threads. Number one, actually back from my days running Simply Accounting, which I had the privilege of doing, to infiltrate a technology into the school system. I remember it was something like Simply Accounting was given away to 80% of all high schools, or maybe it was universities or in colleges. And of course, students become, I hate to say this word, like kind of indoctrinated on it. They become loyal to it. And then when they go out into their real world jobs later, they use it. And I think there's an element of that back to Hartwell giving this technology away to auditors and educators around the world, 10 years before we were even incorporated, that seeded things. And likewise through Big Four, we still have site licenses, those kind of things seeded and loss-led even, well, obviously loss-led surely our roots. And obviously before I got there, we built a reseller channel because, especially early, you don't have the resources to be direct. What I have learned since I've been there, maybe a couple things to point out. In my opinion, in strategic geographies, it's better to be direct, to have that full control. And that was always hard for us because you have to have a minimum contingent. You can just put little pieces of investment. You need full teams and you need patience. And that's hard as heck. For us, we actually ended up acquiring a direct capability in Singapore ultimately. And we have 1,000 customers managed through that business today. So I'd say, one lesson I learned or had reinforced was if you can somehow buy geography over build it, it's faster. And the second thing is, this is a bit maybe anomalous. I had to exit a whole bunch of countries. I had this great problem. We were so spread thin. I would have like I've got 3 customers in Papua New Guinea, and I had places like people in places, that we just don't have the resources to do a good job. So perhaps it's the hangover of the entrepreneur who's going to take every customer they can get, regardless of where they are. When you get someone like me come in, you know, I'd exit a lot of that business too. Exiting a business is hard.
Yeah, it is difficult to make those choices. I've been through it myself, and sometimes you're making a choice about something that you did yourself or made a decision yourself, and now you're having to make a hard decision. The sport analog might be trading away a player that you drafted, and it's not easy to do. Amit, maybe just on the global theme, because I do think this is a really important theme. Any thoughts around being a Canadian organization, going global, doing business outside the country? Anything to add?
I mean, I don't think that's I think as a Canadian company, I think it's absolutely kind of possible to do a lot of global business. I mean, one of my mentors is Sir Terry Matthews. Like, I mean, so he always kind of actually his business plan always starts with a global footprint. So like he talks about like if you don't include India and China or some of the other kind of geographies in your game plan, I mean, you shouldn't even start. But obviously he has a different kind of platform. I worked with a lot of large cap companies in my kind of previous, like back in the day when there weren't that many billion-dollar public companies, Laurie. Like, I mean, and that's not that long time ago, right? Like, I mean, it was like maybe 6, 7, 10 years ago. There were a handful of companies that were over $1 billion. So, open text, truly global, BlackBerry, truly global. So absolutely, I think you need to kind of have a game plan in terms of how you go global. A lot of times you start with North America and then people look at UK as the next kind of, launching pad. And then from there, I think I agree with Laurie. Like, I mean, the best way to do geographic kind of, global expansion is to actually then start kind of going in and acquiring companies, and that's in the countries, because what you do then is not only you bring in, obviously there's a cultural component sometimes, which is very hard to replicate kind of otherwise. So I'm a big believer of kind of, going global. And now you're kind of going like, I mean, there are technologies that actually all you have to do is download them, and then you got to figure it out. Like, I mean, how are you going to use that in your geography, right? Like, so you're seeing companies like Lightspeed now, which are, organically kind of went global, but now they're saying, okay, now we want to acquire companies in New Zealand and Australia, and so on, so that they can actually have that footprint there as well.
Peter, I'd like to make an observation here. I'm always looking for a big theme, something that really shakes the ground that I found in common. And we really haven't been talking about technology today. And yet the media and the excitement is all about the emerging technologies and what's coming, and you got to get ready for widget X and Y. But what I'm hearing as an underlying theme, I'm hearing authenticity, I'm hearing integrity, I'm hearing the customer, I'm hearing mergers and acquisitions, I'm hearing management, I'm hearing hustle. Over and over again, it seems to me, we in Canada have been so enamored by what engineers bring to us, which is product. And so undervaluing the relevance of what you're a case study, Laurie, and you are, Amit, as well, is you're about management, and management is about relationships, whether they be in global, which ones to enter, which ones to exit, the dynamics of dating. I just wish we could get this story across to our engineering department and to our business faculty about how important relational skills are for a company to succeed. You want to pick up from there?
Well, I was going to, it's about change management as well. But again, maybe that's coming from a restartup perspective as compared to a startup perspective. And for us at least, I mean, none of this would have happened for us had we not acquired that true multi-tenant cloud platform at the beginning, and then, saved it from all of the antibodies that wanted to kill it. We had to overfund it. We had to protect it. We had to polish it up. We had to take multiple tries to figure out how to sell it. It was hard, but it was cost of entry. Like, had we not done that, none of the rest of this would have happened.
When I spent almost a year walking from city to city, town to town in Alberta to try and get at the question of why 80% of the small businesses were failing, not just in Alberta, but nationally. And everybody said it was going to be access to capital. And I saw two things. I saw one, the lack of any understanding whatsoever of the importance of the customer and of the staff and of the relational skills for that company to grow. And the second one was not one company, not one conversation that year ever talked about mergers and acquisitions as a growth strategy. So astounding.
My single biggest obstacle to growing at our point of exit was absolutely people, even for me.
Yeah.
And it's a never ending problem. And I know it's cliche to say, everybody's good at running to a certain size. Like, I'd say my C-suite was starting to hit the wall at 100 million US. So folks, some folks can make it over the lines, some can't. So I think that's a never ending challenge. It's something to be very, very conscious about. Whether you're Herald, for example, back there 10 years ago, trying to bust through the $25 million line, or me, let's say, at the $100 million line, it's a never-ending thing that has to be, probably, higher on the priority in terms of discussing and managing.
Well, I mean, the plateaus we hit in Alberta, I only know of maybe one or two companies that will ever even dream of $100 million plateau.
Mm-hmm.
We're talking a million or 10 as a company that's really got the capacity to yield and bring something home.
The difference, maybe to just draw on that, and maybe to be a bit redundant, is Herald wasn't 10; he was 25 million US. So my numbers are all in US. But rather than sell them, he passed the rein. He found someone like me, and certainly we can extend the life of the existing tech companies by doing that. Marrying founders with operators, and then on the tail end of a transaction like us, getting folks like me back into the system, whether it's as angels or operators again. It's obvious to say, but I hardly am ever in any conversations around that. All the conversations I'm in around where's the seed capital and where's the talent, and universities need to incubate more students, and they do. But while we're consciously incompetent there, I think we're unconsciously incompetent in my side of the world, right? Which is kind of the mid-sized maturing business. Maybe you're in these conversations, but I don't think we're talking about that problem yet.
Yeah, and Perry, technology is a perishable item, right? Like, I mean, like once it's out of the lab, there's like 100 competitors that basically are going to make it obsolete. Yeah. And you need people who can actually kind of, continue to kind of work on that market that accepts that. And then realize, as Laurie said, it gets to that plateau. Now, what do I do? I've got an enterprise on-premise platform. That's kind of like, my technology kind of life, where I was dealing with licenses and, maintenance revenues. And then all of a sudden cloud came and it scaled up so fast. And how do you kind of change? The best way to do that is not just technology. At the end of the day, then you need the right salespeople to actually, sell that. All of a sudden your sales comp changed, because previously I was selling a $20 million license to UFA, and now it's $25 per user license. How is Laurie going to come up with the sales comp for this person? I'm like, wait a minute.
I mean, I think Laurie made a very good point, and that is she said it's about change management. And to me, management is management. Management is about managing change. That's what management is. Administration is status quo and maintaining the course.
Yeah.
But management is brave and risk-taking and full of hustle. They're turning over stones every single day. They're in the market. They don't spend a lot of time. I mean, you might correct me here, unless you're in a turnaround. You don't spend a lot of time internally. You're spending a lot of time finding out where is this ship going? Where does it need to be tomorrow, next year, and 5 years from now? But so many people get caught up in administration and operations and forget the fact that's not management. That's administration.
And making hard calls, right? Laurie, I mean, how many times, you probably were making those calls on a weekly basis, right? And it's tough, and these are people who are there forever, their relationships. You're thinking about what is the kind of the ripple effect of this? If domino effect of this, if this person leaves, do I lose this person, and so on? But you got to make that call. And, it's not just like head down operational stuff. It's like constantly managing those different kind of, pieces.
Yeah.
Laurie, I'm curious. You made the decision to move to a SaaS model. Is that a decision that you made in 2011 coming in, or was that an evolution of being in the business and sort of understanding then what you had and then making that?
Man, when was that idea born? Pretty early. So I joined in 2011. We had to do a couple things. We had to earn the right, both with employees and customers, to ask for that change. There had to be a really compelling value proposition in our new, it wasn't just technology, but it was the experience that allowed us to deliver to our customers. And I couldn't deliver that experience until my employees bought in. So we did get the culture turned around. And then we had to have a compelling solution that our customers increasingly bought into. And then we made that move. And so, I don't know, I'm giving you a very logistical answer, but it took us like 3 years to earn that right, and maybe another year to put kind of the infrastructure in place to push the button. And we pushed the button, 4 years in, and converted 90% of our customers in 1 year.
Changing the culture, generally you can't just walk into an organization and tell everybody, hey, think like I do, damn it. You have to sort of make that process occur over time. Any tips or tricks or sort of thoughts in terms of what you did to change the culture that worked?
We are really proud to be one of Canada's top 100 employers, many times over, one of Canada's top cultures. And, I say that just with deep gratitude. It's the accomplishment I'm most proud of. And it wasn't hard to do. I mean, leaders standing in front of a room of people, skill I learned at KPMG. Thank you very much, Perry. And guess what? Asking them what they think and authentically listening, and putting them in charge of their own ideas. That it's not that hard, but it seemed to be a miracle when I did it. And, we've been doing it every month since. And the great thing about town halls, as we call them, is not only do you get great ideas, but you see the person who is brave enough to throw them up in the first place, and you witness how people react to that person, and you put them in charge. And I guess we had a change agent program. Maybe this is a thing I'll throw out, that my second year in, we made public. Many companies have a top talent program, and it's like a secret society. Only the leaders know who the super duper people are, and then they get their secret envelopes. And it becomes a joke because everybody knows there's a top talent program. It just doesn't create trust. So we published ours. We call it Change Agents. And every year, guess what? We tell people who did something amazing, and we give them equity. And I have strategic offsites with them, and I spend a lot of one-on-one time with them. And I learn a lot, and other people know what good looks like. So how is that a bad thing? I'll say this, one thing I always wanted to do was to keep it personal. And it's harder and harder when you have 500 employees, as we do, 300 in Canada, to know something about everybody. It's impossible. But I sure as hell better know something personally and professionally about the 10% of employees that are changing our world. We call them change agents. And that has been, one of my gifts of learning at Galvanize is how change agents can really move the earth.
Maybe my last question, you reflected on the fact that you're the first female business leader to sell a unicorn. We at Raintree started a not-for-profit celebrating International Women's Day. We call it Women in Wealth. We hold galas in Edmonton and Calgary, and it's meant to bring everyone together and recognize the achievements of women to hopefully move ourselves to a more equal world. Curious, as a woman, was there anything that you felt was different about your experience? Did you feel like you were treated sort of equally throughout sort of your leadership career? And is there anything that you'd share with women in terms of your experience and what you learned and how that might relate to their experience.
Thanks for that question. And you'll forgive me, I do have to leave at 4:30 because I actually am speaking to a whole bunch of a couple of hundred entrepreneurs at 4:40 my time. So I love this question. And let me just confess that for years and years and years, I ignored the fact that I was a female. I never talked about it. I didn't want that to seem like I got any special treatment. I always actually thought my problem was I was too young, but obviously the bloom's fallen off that rose. So I just actually really learned to do a better job actually talking about it. You know, everybody has a grizzly in their closet. You know, sometimes it might be gender or maybe it's something else. And I think putting that on your shoulder and, you know, sharing what's been hard about it and what's been easy about it is the responsibility that we have. And I'm trying to be a better female leader by talking about how I have been treated differently and how I've grown from that. So that's, you know, probably a lot more to be said about that. And I'm certainly learning how to, you know, better role model from that perspective.
Okay,
Laurie, I think we've got 2 minutes before you close up, Perry. I'm going to ask a question. Congratulations, Laurie, as well. I agree with Tom Peters. I think women should take over the world myself. But question to you, it took about 6 years, I think, for you to go through that path that I saw. Did you ever lose hope, number one, at the top, or lose faith that maybe you would get there? And or number two, founders typically are impatient to have success immediately. Did you ever have to fight that off?
My challenge with the founder was that he was risk averse. And we kind of broke that bubble 3 months in. It's just like, you know what? There is no more information. This is all the information you're going to get, and we're going to make some calls. And if you don't like it, then I have to leave. And that's just the way the world works. And that's why we had actually flatlined, was because he needed to know everything, and it was impossible to know everything. And so he got stuck. So, and your first question was around, did I ever lose belief? I couldn't afford to. It was my job to believe. And, you know, when we went down a path and, you know, it didn't work, we picked ourselves up. And, you know, I think maybe I'm a fairly metric centric person. Trying to find something you could measure was a way that you could gain control over a situation. So, you know, we had $1 billion heat map, for example. We chunked it out. You know, what are the 7 things that we control over time that will allow us to influence this destiny? And you know what? I mean, oversimplified, that was actually the formula we took. Take your goal, chunk it out, time bound it. You're not going to get it perfectly, but you're at least going to get some of it right, and change the stuff that's not right and make the rest of it visible and just be really public about it. That's what we did in part, at least.
Well, thank you, Sharon, for that wrap-up question. And I am aware that it is just about 4:30, so I'm going to wrap things up. And I want to thank Peter for your mentoring. Amit, very much, not just for today, but for the work up to today and the number of questions and answers that you and I shared to get ready for today. And Laurie, in particular, you are a case study. I think whether we're talking gender, whether we're talking startups, whether we're talking any dimension of management, I think you did it all, and you didn't come in with all the knowledge. You learned as you went. And I think that there's an element of vulnerability to that. And there's also a theme, and I remember we shared it when I was managing partner with KPMG, and it was never let them see you sweat. So you've all done extremely well. Thank you all today. Claire, we can wrap it up, the recording, but if there are those that would wish to stick around, Laurie, I know you have to go, and there may be others as well, but we'll close the recording down now, but we'll keep the webinar open for a little while longer to see if there's any just general chatter.
Thanks so much, everyone. That was really fun. Really appreciate the chance to meet you all.
Well, thank you, and good luck with your future. And I'd like to chat